Right now, silver is standing at one of the most critical moments in its modern history. Today, September 2025. The US and global markets are witnessing silver trade at levels not seen in over a decade, brushing against and holding above $44 an ounce. For many, this isn't just another commodity story, this feels like a financial turning point. Some analysts are whispering about the possibility of silver not only breaking into the 50s, but running into the 60s and beyond. Others, however, warn of exhaustion, of a correction just around the corner, of the dangers of chasing a rally that may already be stretched too far. So what is really happening in silver today? What are the experts saying right now? And most importantly, where is silver headed next? Could we be on the edge of a breakout that reshapes the precious metals landscape? Or are we staring down the risk of a sudden reversal that could shake out unprepared investors? In this video, we'll take a deep dive into the latest news, the key drivers, the institutional views, and the emotional roller coaster that silver investors are living through at this very moment. Silver's story in 2025 has been building steadily, but the past few weeks have been extraordinary. The price has broken through levels that once acted as stubborn resistance, climbing past $44 per ounce and holding steady in that territory. This surge has not come out of nowhere. It is the result of several forces converging all at once: monetary policy expectations, supply deficits, industrial demand, and geopolitical tensions that are making safe haven assets attractive again. In the United States, the Federal Reserve has become the ultimate wildcard. Markets are widely expecting rate cuts before the end of 2025. The timing, whether in October or slightly later, is uncertain, but the general expectation is clear. Rates are coming down. For silver, this matters immensely. Unlike bonds or savings accounts, silver doesn't yield interest. When rates are high, the opportunity cost of holding silver is also high, but when rates fall, that cost diminishes. Suddenly, silver looks a lot more appealing, especially for investors seeking protection against inflation and currency weakness. And speaking of currencies, the US dollar itself has been under pressure. It has experienced weakness in recent weeks, making dollar-denominated assets like silver cheaper for buyers overseas. This fuels demand on a global scale. Add to this the persistent deficit between supply and demand, where industrial usage continues to outstrip what the mining sector can provide, and you have the recipe for an explosive rally. Analysts estimate that silver has faced hundreds of millions of ounces of shortfall in recent years, and there's little sign of that trend easing. Institutional voices are weighing in strongly. BlackRock, the world's largest asset manager, has already signaled preference for hard assets like gold and silver. Jeffrey Gundlach, one of the most respected bond strategists in the world, has also pointed in the same direction. When the bond king and the biggest money manager on earth lean toward metals, investors take notice. HSBC, another giant, recently upgraded its silver outlook for 2025, citing stronger gold performance, heightened geopolitical risk, and resilient safe haven demand. Interestingly, their forecast average of $35 per ounce for 2025 is already well behind where spot prices are trading, suggesting either conservatism in their models or an acknowledgement that volatility will remain intense. But not everyone is euphoric. Some market commentators are waving caution flags. Technical indicators, especially momentum tools like the Relative Strength Index, are showing that silver is entering overbought territory. This does not mean the rally must stop, but it does warn of fatigue. A short-term pullback towards support levels, around $43.72 or $43.65, would not surprise seasoned traders. In fact, many would welcome such a correction, as it would establish a healthier base for the next leg upward.
Looking at the bigger picture, silver is now trading within an ascending channel. This means price action has been climbing steadily, setting higher highs and higher lows. Breaking resistance at $44.05 was an important victory for the bulls. Now the market has its eyes on the next thresholds: $44.44, $45, and eventually the psychologically important $50 level. Breaking through 50 would not just be another step higher, it would represent a regime change, a symbolic moment that could trigger waves of momentum buying and change investor psychology in a profound way. So where does silver go next? Let's explore three major scenarios. The first and most likely scenario, according to many experts, is the bullish path. In this case, silver continues its upward trend through the rest of 2025, driven by the Fed's expected rate cuts, ongoing dollar weakness, and stubborn industrial demand. In this pathway, silver could realistically test and break $50 before the year is out, with potential to extend toward 55 or even 60 as we enter 2026. Longer-term structural factors like the rapid expansion of solar energy and electric vehicles only add fuel to this case. Silver's critical role in these industries is irreplaceable in the near term, and deficits in supply will continue to act as a tightening noose. Some of the boldest forecasts envision silver pushing into the $60 to $75 range within just a couple of years. The second, more conservative scenario is a gradual uptrend with controlled volatility. In this outcome, silver sees some pullbacks, perhaps even dipping back to $43 or $42 temporarily, but each retracement is met with buying interest. Silver consolidates, builds stronger bases, and ends the year in the range of 46 to 48. This path would still be bullish overall, but less dramatic than the breakout scenario. It reflects a more cautious balance between investor enthusiasm and technical constraints. The third and bearish scenario is the one few want to hear, but everyone must consider. If the Federal Reserve surprises markets by holding rates higher for longer, or if the dollar unexpectedly surges due to capital flight or global risk events, silver could lose its momentum. A sharper correction could send it back down to $40 or $41, and in extreme cases, even lower. Overbought conditions could trigger sudden selling, especially if leveraged positions unwind. Industrial demand shocks such as a slowdown in global manufacturing or alternative materials emerging could weigh heavily on prices. While this scenario is not the base case for most experts, ignoring it would be dangerous. Now, beyond these scenarios, there are wildcards that could tilt silver's destiny. Imagine a major geopolitical crisis erupting, pushing investors into safe havens overnight. Silver would likely surge. On the other hand, picture a technological breakthrough that reduces the amount of silver needed in solar panels. Demand could weaken, and prices would suffer. These possibilities remind us that no forecast is absolute, and that silver, like all assets, is subject to the unexpected. But what about the human side of this story? Markets are not only numbers and charts, they are driven by human emotions. Right now, fear of missing out is everywhere. Headlines scream that silver is at 14-year highs, and many retail investors are rushing in, worried they will miss the next big run. This creates euphoria, where buying feeds more buying. But just as quickly, fear can replace greed. When prices dip, panic selling often follows, trapping new investors who bought at the top. The long-term silver holders know this cycle well. They understand that patience and endurance are required to weather volatility, and yet they must remain vigilant, because the greatest danger in markets is complacency, assuming that the current trend will last forever. So what should investors watch from here? The signals are clear. The Federal Reserve's next moves, the state of U.S. inflation, the trend of the dollar index, industrial demand in the renewable energy and technology sectors, supply updates from mining companies, technical breakouts above resistance levels or sharp breakdowns below support, and finally, sentiment data showing how heavily the market is positioned. All of these are clues, road signs, pointing to where silver may travel next. As of today, September 28th, the balance of probabilities leans bullish. Silver has momentum, institutional support, and a favorable macro backdrop. But markets never move in a straight line. Whether silver climbs to 50 and beyond, consolidates around current levels, or shocks us with a pullback, one thing is certain: the coming weeks and months will be pivotal in shaping silver's legacy in 2025 and beyond. Disclaimer: this video and narration are created for informational and educational purposes only. Nothing in this content should be taken as financial advice, investment recommendations, or trading guidance. All opinions and analysis reflect publicly available market commentary and data as of September 28, 2025. Markets are inherently volatile and unpredictable. Always conduct your own research, consult a licensed financial advisor,